very warm welcome to you. It's always a delight to have you for company each week on the program. We remain your source for all the exclusive interviews, events, and major happenings in the world of business. My name is Lucy Lugbe. Welcome to the program. On our lineup this week, first we join Faith and our guest, Mr. Eddie Efekoha, the Managing Director of Consolidated Hallmark Insurance PLC, on the CEO Rendezvous for the exclusive session on the future of the Nigerian insurance industry, effecting changes for growth.
Next 10 years. I've had the privilege of serving in two arms here and there, the NIA before the CIN. And one thing I recall that we did at the NIA, even with the current commissioner then as the DG, was to get some of us leaders in the market, 12 of us then, working with KPMG to produce a roadmap for the industry. That for me was a star achievement during my tenure at the NIA. Because if you have not planned for your future, what you have done indirectly, you have planned to fail. So certainly you will fail. But if you know that this is the way I will need to go, and we all jointly say, yes, this is the way truly we should go, having weighed all the options available, then surely, slow and steady, you will get there. So we did. And one of the things that we identified was the issue of recapitalization. So when you talk to me today and ask, what are the things? I would say that, yes, the industry indeed needs to be well and better capitalized, okay? But in the next 10 years, is it just capital? And is it capital the way it's being done now? I think if you ask me personal view, I would have thought that some little tweaks would have been necessary. I wouldn't have gone for the quantum of capital because it needs to be related to the market and to the business. And rightly so, just before all of this fixed amount capital, we were already talking about risk-based capital, which meant that you needed capital that spoke to the level of business you're doing. If you are doing motor, and motor constitutes 80–90% of your business or portfolio, then the capital should not be the same as someone who is doing any of the special risk. That for me is a concept of risk-based capital. But today, our regulator has moved from there, even though they started it, but they moved from it and went the absolute number without taking account of the volume and the profile of the risk you have underwritten. So during my time at NIA, we did this project having that. The capital we thought we're looking at was one that was based on the risk that you are running. And of course, rightly so too, I think there are some other minor issues. They may appear minor, but they are equally key, which I know the leadership of the industry have tried to engage the regulator. And I think that is important for us to focus at the entire stakeholders. Everybody matters in this equation for this industry to grow. You need to reward employees very well, yes, for them to give out their best in delighting the customer. The regulator needs to do what they have to do, and they need to get their levy and all of those things, yes. But this group, when we talk recapitalization, we are speaking to investors. And this group of stakeholders must equally be delighted. How are we delighting them? How are we delighting them? And that is why I think that we've been talking about the Insurance Act review for some time. It's taking time. We all are. So in the next 10 years, I'd like to see that matter driven speedily, because there are a couple of issues in the current act that are anti-investment. When that act was contemplated and put in place, appraising unexpired risks was by rule of thumb. I remember my growing up days, some of the companies, when they come to the end of the year, what they do is that this risk are all still running. They just allocate 10,000, 5,000 to each of them, not minding the, in quote, the quantum of risk we are talking about. During that era, therefore, if you say there is need for a contingency reserve, it's understandable, which is like a second level protection for the customer. Then nobody talked about IFRS. Today, we are talking of IFRS. Today, we are talking about actuarial determination of the value of unexpired risk. So, if these calculations are truly actuarially determined and supposed to be correct, then there should be no need for contingency reserve, because now you are computing the risk. Nobody is just dropping numbers. And that is why I'm not blaming anybody. It was nice that we had the Insurance Act at the time we had. But today, knowing what we know, that act requires review. Because the contingency reserve, whether it's stated otherwise in the current act, is taken out of profit. And that is why the investors are not getting enough. And investors will not come to this market until the returns come to them. They put money, and then you are setting the money apart. After you have taken profit, you've taken everything, taken tax, and then what is left, you now say part of it goes to contingency and part. And even to make matters worse, at a time of recapitalization, you say you are not taking account of it. When will these investors take account of the money you are keeping for them under that contingency reserve? Is it only when the company truly fails? Because it's only when you will now liquidate the companies that that money will be available. So these some challenges, which I think in the next 10 years, there's need to resolve them. If resolving them means that we need to review the act, sit down and review it in line with what, let's do so, because it does not speak to international best practice, in my own opinion, at the moment. We need to look at it. It's only, I think, those living in one, I don't know, the century or the generation, to begin to define capital as paid up and not shareholders' fund. I don't know. I know that there's one word called shareholders' fund. So in financial parlance. So what does that mean? Meaning that the money making up that belongs to shareholders. So when you are now going to take money, you still want more money from shareholders. Why is that definition not changed? I think these are issues, so that investors will come and know that investors are locked in. And those who are already in, they're already in. They can't get out. But if they have the window, they will get out. The issue is that we need to address these issues. That's another aspect I like to see. Of course, insurance industry, we need to woo the young ones, because indeed, times where we thought that insurance is insurance, you need to just study insurance in order to, no, insurance is for all segments of life, all facets of life, meaning that we must have that knowledge. So we must attract the young one from all the disciplines into our industry. And also, I will take one point again from the 10-year kind of roadmap we did at the NIA. We recognize the population of this country and realize that there's no way we can get there, particularly to the bottom of the pyramid, without evolving agency and using technology. And we realized that we needed to give a boost to the agency, which will help to absorb a lot of the boys and girls who have graduated and have no job. But of course, you all know, insecurity have not helped. This agency is concentrated in the mega cities, Lagos, Port Harcourt, Abuja. Of course, it could have been elsewhere. And today, there's need for a lot of partnership with so many sectors. COVID-19 has told us the only way to live is technology, is digitalization. How can we do all of this when our industry cannot partner with the telecom and in a manner that the regulator and all of that will say sign off? I think we need to. So I like to see an industry that truly appreciates the values that will be derived from partnering with other segments and sectors of this economy. We need to bring this. Insurance cannot exist solo because we will not derive the right returns. We need to now to really, really engage others, and together we will be better. Together, again, I think professionals who are working or the staff working in the industry will be okay. Government will be okay because the tax and all of that will improve. You know, I don't want to get into that, but you know that one of the commonest issues that we discuss when we gather is penetration. How much are we generating by what premium side relative to market and all of those things. So if we are not driving more premium because of the partnerships we're not going into, what happens? Levies to regulator will increase. Tax to government will equally increase. And there will be surplus to pay our people fairly okay, better than it is today. You still find today CEOs who have retired in this market living like paupers. Why is this so? It shouldn't be. Or, if, let's say not CEO, but senior members of staff. Because they have not been adequately remunerated. So we need to, I like to see some of these little snippets here and there addressed in the next 10 years so that this industry truly will look back and we are happy that, yes, we came here, we passed through, we made these suggestions, and we are happy that they are in place. Thank you.
Premiumbeat.com.
Speaking in the course of the interview, Mr. Efeko has said that investors will continue to stay away from the insurance sector until appropriate returns of investment gets to them. Take a listen.
Today, we are talking of IFRS. Today, we are talking about actuarial determination of the value of unexpired risk. So, if these calculations are truly actuarially determined and supposed to be correct, then there should be no need for contingency reserve, because now you are computing the risk. Nobody is just dropping numbers. And that is why I'm not blaming anybody. It was nice that we had the Insurance Act at the time we had. But today, knowing what we know, that act requires review. Because the contingency reserve, whether it's stated otherwise in the current act, is taken out of profit. And that is why the investors are not getting enough. And investors will not come to this market until the returns come to them.
On this edition also, we will bring you highlights from the 2022 National Conference of the Association of Registered Insurance Agents of Nigeria, ARIAN. The conference was held under the theme, Insurance Penetration, a Determinant to Economic Growth, Agency as a Catalyst, at the LCCI Conference Center, Alausa, Ikeja. As expected, insurance agents turned out in their numbers for the conference and their annual general meeting. Let's check out excerpts from the event.
effectively. Then focus on selling customers the right solutions that will help them build their trust in insurance. I've mentioned this earlier on. Don't sell for selfish interest. Sell to customers on need basis, products that will suit their needs.
The insurance agency network can provide employment opportunities for more than 500,000 graduates every year, while at the same time help to more investable funds for national development.
All right, welcome back. Moving on, we now bring you highlights from the 2022 Aryan National Conference that took place in Alausa, Ikeja. The annual conference provided a veritable platform for serious conversation on insurance penetration and awareness in Nigeria despite our huge population. Happy viewing.
Premiumbeat.com.
The Association of Registered Insurance Agents of Nigeria, ARIAN, plays a significant role in the insurance industry in Nigeria. This is so because as intermediaries, insurance agents enjoy strong relationship with the insuring public as the interface with them. This members-only association recently put together its 2022 National Conference, AGM election, and new ESCOs induction. The conference this year was organized under the theme Insurance Penetration, a Determinant to Economic Growth, Agency as a Catalyst, at the LCCI Conference Center, Alausa, Ikeja. In a keynote address, the representative of the Managing Director of ICO Insurance PLC, Mrs. Titilola Okunlola, implored agents to pursue career development to remain relevant.
From the regulatory point of view, we want to suggest that we enforce existing regulations such as compulsory insurance and local context, then enable partnership with other developed sectors such as banking, telcos, and others to drive the distribution of insurance products and services. And for us as the businesses, we need to develop products and services that are targeted and addressing risks faced by the population. And that is the reason we have to listen to the voice of the agents. They have interface with the customers out there. They know what they require. So we need to sit down with them and come up with tailor-made products that will meet those needs. Then we need to develop an effective recruitment and retention strategies for agents. I have mentioned this earlier. Then establish partnerships with digital distributors to drive more penetration. Just like agents are pursuing driving penetration, we can equally leverage on partnerships. Then we can equally re-image product development process. How do we change from the way we develop to new ways of developing products? Then on the part of the agents, you need to understand the markets and develop capabilities to optimize communication with clients. Effective communication represents your organization very well. You are the image builders for your organization and make sure you work on that and represent effectively. Then focus on selling customers the right solutions that will help them build their trust in insurance. I've mentioned this earlier on. Don't sell for selfish interest. Sell to customers on need basis, products that will suit their needs.
In his welcome address, the national president of ARIAN, Mr. Kazeem Olakunle Odewumi, said that ARIAN is aligning its strategic mission with the market development and restructuring initiatives of NICOM.
Nigeria has massive potential for business growth. No wonder several foreign insurance companies are making into the market. The challenge is that insurance companies in Nigeria have not been able to leverage on this massive market. Area as an association, our strategic objective is to drive insurance penetration according to NICOM NDRI, that is Market Development and Structuring Initiative. The insurance agency network can provide employment opportunities for more than 500,000 graduates every year, while at the same time help to mop up investable funds for national development.
The plenary session of the conference focused on digitalization, a tool for advancement in insurance agency business in Nigeria. Panelists were Mr. Joseph Lawal, National Agency Controller, Leadway Assurance, Mr. Akiniyi Akinloye, Agency Manager, Old Mutual Life Assurance, Mr. Femi Oladimeji, Group Head, Retail Mutual Benefits, Mrs. Titilola Okunlola, ICO Insurance PLC, and Vera Aimufua from the National Insurance Commission, NICOM. In his submission, Mr. Lawal noted that insurance penetration will continue to be low for as long as insurance operators fail to create awareness, especially through the mass media.
Many states in our country today do not have insurance in place. So if we can have a better collaboration with government, both at states and federal level, we will have a better day for penetration. Definitely, the study says the entire African continent can only boast of $1.64 billion as what we have contributed to GDP. And in Naira, that is about 500 billion. And this report is at 2008 or 2009, about. So imagine a scenario where we have the state government all buying into insurance, all doing insurance at all levels. Definitely that figure we jump. You agree with me? So collaboration with governments will also do us well. Also, insurance, this is still within internal factors. Insurance also need to demystify insurance. We need to do more than what we are currently doing. Okay, we need to carry the information further than what we are doing. I apologize if this may sound offensive, but you agree with me that there are some insurance companies, it is almost the end of the first quarter. Some insurance companies in our country today have not done a single public awareness for insurance. And here we are talking about insurance penetration. God will not come from heaven to do the publication advertisement for us. So you can just see from that end, some of us have not done a single public awareness. So tell me, how will insurance get more popularity?
The high point of the Arian conference this year was the election and induction of ESCOs and awards. The Association of Registered Insurance Agents of Nigeria has a long way and made significant progress in their roles as foot soldiers in the insurance industry. It is hoped that as more companies begin to take the welfare and working conditions of agents seriously, many unemployed youths will settle for agency job as is obtainable in other climes.
That is our time on the program this week. Many thanks for being a part of it. Join us same time, same station next week for a fresh package. In the meantime, feel free as always to connect with us on all our social media platforms. Don't forget also to join us live every Wednesday by 9:45 a.m. on Niger FM 102.7 for our flagship Pidgin English program, Waiting Insurance They Do Safe, powered by NICOM. My name is Lucy Ulugbe. Until next time, be good and stay safe. Bye-bye.